So let's just kick off with market numbers. We see NGX. We saw it open today at down about 0.13%, but we've seen a bit of recovery. Midday, we saw it fluctuating at about 0.05%. It got about to 0.12% in the positive territory. But right now, we are teetering in the flat line near 0.03%. We're hoping that at the close of business, maybe we would be in the green and not in the red. And we saw stocks that were driving it, some of them in the oil and gas sector, some of the banking stocks probably still bouncing off yesterday's positive performance. Now look at the JSE in South Africa. We see it down 1.87%. See EGX 30 at intraday also down 0.38%. But Kenya's stock market closed Tuesday's session also in the red, down 1.74%. But before we move on to the Middle East and see other markets out there, let's dive into what's happening here at the NGX, which obviously we have Philip Andegbe is Vice President and Head of Investment Research at Cardinal Stone Securities. Good afternoon. It's good to have you on the program.
Yeah, good afternoon.
Yes. You heard we talk about the numbers this morning. A lot of volatility going on. It's still, I want to know, is this a reaction to, Trump's tariffs taking effect today? Are the markets reacting to this, or is this just a normal market at play here?
Well, I think it's broad reactions to the risk that has been intensified by these tariffs. Remember that the tariffs and implications on trade have more or less negative pass-through to demand outlook for commodities like oil, right? And that speaks to potential challenges to variables like fiscal deficits for Nigeria. So when there are concerns like this, you expect that there will be some sell-offs, and that's what we've seen, right? A lot of sell-offs across the space. I think it started in global markets. You're even seeing even more intensified sell-offs, right? But Nigeria, I think, we're a bit insulated from the fact that foreigners are not the predominant drivers of our market. I think as at February, they constituted about 8% of the total market in terms of transactions activities.
Okay, so if we want to talk about the stocks that drove the market this at intraday, we've seen O&O and some other stocks that investors are picking at, cherry picking. We see bargain hunting at play here. But what about O&O? What is it about O&O that's making investors bleed it so much and probably coming back to pick it up?
I would say potentially bargain hunting. I think that's the best explanation because it was sold down significantly to just over 30 naira. And I think investors may have remembered that they are also the subject of the recent acquisition that they did. So a lot will depend on how well they're able to sweat those assets going forward. And that may be a critical driver, going forward. So maybe some investors are positioning in anticipation of better numbers in the future.
Okay.
Sweated.
And talking about numbers, we mentioned earlier there's that ongoing NGX Group annual general meeting. That's the 64th annual general meeting ongoing here at the NGX, right at the 20th floor there. But we saw that fantastic number coming out of the 2024 earnings report, and we saw 104% growth in revenue. Talk to us about that.
I guess there will be a lot of very happy shareholders in there at the moment because the numbers were indeed really good. I think they were able to achieve that by pushing strongly very good revenue growth and cost efficiency. Speaking to revenue growth, I think the focus on more or less boosting the growth or the increases in key line items like listing fees, which of course was helped by a lot of market activities during the year. And of course, I think transaction fees also rose very strongly, and that speaks to improved volume of trade. And the good thing about the volume of trade is that a lot of it was actually driven by domestic players, which is good because if the market is mostly driven by domestic players, you are a bit more insulated, from global shocks. But in addition to that, I think they also did very well in terms of cost efficiency, with costs just rising by about 30%. When we look at expenses, of course, what we typically do is try to compare the growth in those expense lines to revenue growth and, of course, to inflation. On both fronts, they performed very well because revenue grew very strongly, I think in excess of 100%, while expenses grew just about 30%, which is also below inflation rate. So that's some kudos to the management because in this environment it's quite tough. And also given that I think the bulk of their cost is operating expense, and then the second largest component of their cost is personnel cost. So I think really decent numbers.
And you're looking at their EPS for 2024 is at 4 naira 50 kobo, a huge leap from 2 naira 43 kobo recorded in 2023. What do you think they did differently this time around to give us this turnaround that we're seeing?
I think it's just deliberate cost efficiency. And I think there was another line item I think it was also important is net FX income, which was about 16 to 16.5% of revenue. And that is really very key. And why it's key is because we operate in an environment that is a bit more volatile. We're talking about tariffs, implication on oil, implication on FX. You want to stick with companies that are likely to report some sort of FX gain in the event of Naira depreciation. That's exactly what it did. That's just one support. But I think the other impacts of strong revenue growth and proper curtailing of expenses explain the high EPS. And of course, it also cascaded to decent dividend. I think they reported about 2 naira dividend, right, which is the highest, which more or less implies the highest payout in about 2 years. So I think really decent. Happy shareholders upstairs.
Yes, really happy shareholders. And the chairman was promising better result for 2025. But I just wondering, and he promised big tickets, listings for 2025, like Dangote, refinery and NNPC. But I want to know, are we going to see NNPC, looking at how it's going, the trajectory, do you think we'll see NNPC, Dangote refinery, coming on board in 2025 and probably boosting the market capitalization of the NGX?
Yeah, on that, we have to wait to see how things unfold. But what is clear is more listings, more market activities will translate to better numbers for the NGX. I said listing fees grew by about 300% in 2024. So if you see big ticket listings in 2025, that will, of course, again, boost that line item. And I think that line item is very, very important in their books. It's one of the biggest components of their income. So if that happens again, we expect some strong performances.
Thank you so much, Phil Anegbe, Vice President and Head of Research at Cardinal Stone Securities. Thank you for joining us on Business Incorporated. We are the NGX. I will hope to see more of you.
Yeah, thank you very much.